Today I would like to analyze Baidu, one of the largest technology companies in China and one of the worst performing stocks as well. So they have the search engine in China, they also have the robot taxi with a self-driving car, and they have the early bot as well, similar to ChatGPT. So if we take a look at the stock price, we can see in the 5-year charts we are down around 18%. So we're going to take a look at the financials to find out if it's a good buy right now. The first thing we can recognize is a market cap of 28.94 billion US dollar. This makes Baidu the 62nd biggest Chinese company in the world by the market cap. Now we're going to take a look at the financials. The first thing we're looking for is revenue growth in the last 5 years. We want to invest in a growing business and not a declining business. So in 2020, the revenue was around 107 billion Chinese yuan. This was a decrease around 0.3% from 2019. This is something we don't like to see. But finally in 2021 we saw the good growth around 16%. Then in 2022 we saw the decline again around 0.6%. This is not really good. 2023 we saw the growth around 8.8%. This is quite good. Then in 2024 we saw the decline again around 1%. So overall I think this revenue growth was very inconsistent, but it's still a check here because we saw some slow growth in the last 5 years. The next thing we're looking for is free cash flow growth in the last 5 years. So free cash is very important because it can be used to pay the dividend, to pay the stock buybacks, to invest in the business, and also to pay back the debt. So in 2020, the free cash flow was around 19 billion Chinese yuan. This was a decrease around 13%. This is something we don't like to see. Then in 2021, we saw the decrease around 51%. Again, something we don't like to see. In 2022, we finally saw the increase around 93%. This is quite good growth. And then in 2023, we saw the very good growth around 42%. And then in 2024, we saw the decline around 48%. So again, very inconsistent free cash flow growth in the last 5 years. So it's not a check here. The next thing we're looking for is a free cash flow yield over 4%. So this can also tell us about the valuation of this company. The higher the free cash flow yield, the higher the indication for undervaluation. So we're going to take the free cash flow from 2024. This is around 13.1 billion Chinese yuan. We're going to divide with the current market cap, 208.49 billion. So then we're going to get the free cash flow yield for 2024. So the number we're going to get would be around 6.28%. So this is over the 4%, so the check here. It could be an indication for undervaluation, but we also need to consider that many years the free cash flow was very inconsistent and didn't grow much. I think we should also make assumptions about the free cash flow in the future. If we ask ChatGPT, we can see here in 2025 the free cash flow could be around 25 billion Chinese yuan. In 2026 around 21 billion Chinese yuan. In 2027 around 26 billion Chinese yuan. What we can see here as well, in 2025, the first quarter, we saw the negative free cash flow around 8.9 billion Chinese yuan. This is because of high infrastructure investments. So overall, I think in the future, this company could maybe make a higher free cash flow because of the high investment. But probably in 2025, the 25 billion Chinese yuan is very unrealistic. So let's assume for 2027, we can reach around 20 billion Chinese yuan. Then we're going to divide it with the current market cap, 208.49 billion. Then we're going to get the free cash flow yield for 2027. So the number we're going to get would be around 9.59%. So that's a very high free cash flow yield, and I think it's an indication for undervaluation. But we also need to consider that this company has a lot of stock-based compensation. So they pay the employee with the stocks. This is also a cost not in the free cash flow included. So we have to consider that as well. The next thing we're looking for is a debt to free cash flow ratio under 5. This means the company can repay the debt with the free cash flow in under 5 years. A very important number, because if a company has too much debt and cannot repay the debt, it can risk to go bankrupt. So first we're going to take a look at the long-term debt. We can see here 52 billion Chinese yuan. Then we're also going to take a look at the short-term debt, 10.67. We need to add this number as well, 8.44. So overall around 19 billion Chinese yuan. We're going to divide it with the current free cash flow, 13.1 billion. So then we're going to get the debt to free cash flow ratio for 2024. This is around 5.41. So this is not a great number actually, it's over the 5 that we are looking for. It means in a little bit over 5 years we can repay the debt with the free cash flow. It's not a check here. We can also take a look at the cash on hand, how much money this company has in the bank. We can see here around 127 billion Chinese yuan. This is a very good amount. We can actually repay the debt with this money. But overall, I think this company not has the best balance sheet. The next thing we're looking for is the enterprise valuation to free cash ratio under 25. So this can also tell us about the valuation of this company. The lower the number gets, the higher the indication for undervaluation. So we want to see a low number here. First, we're going to calculate the enterprise valuation. This is the current market cap, 208.49 billion Chinese yuan. We're going to add the debt as well, 71 billion. We're going to take minus the cash, 127.74 billion. Then we're going to get the enterprise valuation, how much the whole company is worth. This is around 151.75 billion. So this number we're going to divide with the current free cash flow, 13.1 billion. Then we're going to get the ratio around 11.58. And yes, this is a very good number. It's an indication for undervaluation, so it would be a check here. But of course, this company is a Chinese company. They often look undervalued in the financials. We can also calculate this number for 2027 with the free cash flow around 20 billion Chinese yuan. Then we're going to get a different number actually. So the number we're going to get would be around 7.58. And yes, this looks like the extreme undervaluation. So it's also a check here for 2027. So this company does look undervalued right now. The next thing we're looking for is shares outstanding decrease. This means the company buys back their own shares. We like to see that especially if we think the company is undervalued. So we can see here in the last 5 years, actually the shares outstanding increased. But we also saw some years with decreasing shares outstanding. 2019 around 1%, 2020 around 3%, and 2024 around 1% again. So overall, I think it's a good sign that they also announced in 2024 the buybacks around 6.7 billion. So overall, it's not a check here, but I think in the future, if they buy back more their shares, is a very positive sign. Can Baidu Stock be a good buy right now? So let's start with the positive. So I think we have a decent balance sheet. The debt amount is quite high, but we also have a lot of cash in the bank. The free cash yield around 6.28% is also looking good with our free cash assumptions for 2027. The free cash yield would be around 9.59%, which would be an indication for undervaluation. The enterprise valuation to free cash flow ratio around 11.58 is also very good. We want to see that number under 25. For 2027, with our free cash flow assumptions, this number would be around 7.58, and this would be an indication for undervaluation. Then we also have the stock buybacks that they announced around 6.7 billion US dollar. This is a big amount, and this can help the stock price to increase as well. What I don't like to see about this company is a decent revenue growth in the last 5 years. In some years, we even saw the revenue decline. Then we also have the decline in the free cash flow. This is something we don't like to see. So overall, I think this company can be a good investment, but only if they can increase the free cash flow again in the future. If you found this video helpful, don't forget to like and comment and subscribe for more content.